Let's also bring on board Manish Singh, Chief Investment Officer at Crossbridge Capital, joining us on the show right now. Manish, hi, afternoon. Just assessing the damage across world markets. As an investor, how do you deal with situations like these? Because you don't know how long it's going to last. You don't know the extent of the damage. What's really going to come out of this tussle between US and Iran?
Yes, so good afternoon. And my view is that we have to look at the money in the sense that look at what the futures are doing and what the oil market is. My personal belief is that there's plenty of oil supply in this world, so one should not be concerned about oil price really hiking up. And the only scenario in which oil price really hikes up if there's destruction of capacity. And when you talk about destruction of capacity, you talk about will there be destruction of capacity in Saudi Arabia or in Iraq. These are two basically main producers in that part of the world, and I just do not see that happening. So my personal view is that you have had some spike in oil price. It's going to be a bit like what happened last year when part of Saudi capacity was destroyed and it was built up very quickly. I just do not see an incentive for Iran to get into an all-out conflict with the U.S. They are no match to having a conflict with the U.S. And these things happen only when two sides feel that they are equal and they can win out of it. People keep talking about World War I. The World War I went on because the Germans, the French, and the Brits, they all thought they can be better than each other, and they can have a fair fight. That's not the scenario. So I just do not see, A, there's plenty of oil supply, and B, I don't think that the Iranians are any match, and they're not going to do anything stupid, which brings even more trouble for them. So if I use that as a base scenario, my only things that I'm looking at are Fed. Fed has already done a QE without calling it a QE, and they continue to do that. And that just tells me that barring the noise, I would think that the market will stay where it is and continue to ratchet up slowly higher. Emerging market will have its own issues, but I don't think it will be related to oil. It will be their own domestic GDP or growth issues, but not oil-related ones.
Sure. But do you tactically reposition your portfolio, Manish, in lieu of this event? Do you now increase allocation to mid and small caps, which have underperformed for almost the last 3 years, as opposed to those 15-odd NIFTY names, which have given you that 13% return in the year gone by? But now it seems that, everything seems to be going against them, at least as of now, because the valuations clearly don't support the growth multiples that they are going to post in the near term.
I mean, personally, for me, when I invest, my investments are more in large cap, so not in small and mid cap. So I have not looked at that sector rotation. But in terms of allocation, my allocation is underweight emerging markets for structural reasons. In terms of what we saw last year, U.S. economy growth being okay, but not as roaring as it was in the past. I still keep a U.S. overweight position and emerging market underweight position. And given what has happened or what is happening in Middle East now, I'm not looking to change my view immediately. And having said that, I'm not overly concerned, as I said right at the beginning. But I'm not looking to make any changes to my allocation. I continue to remain dollar positive, U.S. overweight, and emerging market underweight. And India, of course, you will know this yourself, that there are lots of issues going on in India at this time. But growth-wise, it's still hitting a 6% level. The finance minister is making a lot of changes, and she's making new announcements. Hopefully, those things are going to help. Growth-wise, U.S.-wise, Fed is competitive. So you will get 2%, 2.5% US growth, so that should help. So there's no concern, in my opinion, to panic or be a seller. To your question about the rotating from large cap to small cap, I haven't looked into it, so I cannot answer. But my views on equities are positive.
Just, Manish, to pick on that point about your view on US as well as the way the dollar is going to pan out, would you say that it would be prudent perhaps to stay put within IT? Because you can immediately, even in today's session, you saw that shift to the defensives, and IT was the only one which which managed to withstand today's storm.
I would agree with that. I think that, it's very easy to get caught in what's happening at the macro level, and that's what the whole Middle East agenda is, and it has just taken over the news wire. One should just look at what are the basics of what is the building block. And there, oil, U.S. economy, growth, those things are key key thing to look at. I mean, you will remember whole of last year, a lot of people have been bearish on equities, saying U.S. will have a recession, and it was one of the most hated rally all throughout the year, and people start joining in towards the end of the year. I just do not see a U.S. recession. I just see U.S. Fed being very accommodative, and if anything, more so given what's happening in the Middle East. So that will continue to help the U.S. economy. And 2.5% U.S. growth is going to be very useful for the entire world. You come down to Eurozone in Europe. I mean, there is not going to be any more rate cut or negative rates, and rather they are going to help the economy. If you look at ECB conference, for every question, the response is, "Oh, we are having a strategic review." So you're not going to think any new news coming from ECB. In the meantime, the government is also getting supportive. So if you take these two things into account, and U.S. and China is about to sign the first phase deal, as we understand, on 15th of this month, I just do not see where the negative scenario is going to come from. So people will be surprised once again, as they were last year, and they will continue to buy. I do not see spike in oil price coming, as I've said before, given there's plenty of supply, and I just do not see Iranians getting into any overt war on Americans, because that will just destroy the Iranian economy, which is 45% running at 40% inflation, and they have a massive negative GDP growth. So I just do not see an appetite. There will be guerrilla wars and proxy wars, but that has always happened. That's been going on for the last 10, 20 years.
Manish, thank you for sharing with us your outlook. Thanks so much as well, Kunal, for joining in, and Sudeep for giving us your fundamental take. As we wind it up,